World gold price surpasses $2.700. Gold prices increased sharply for the second consecutive session due to tensions in the Middle East and expectations of a U.S. interest rate cut next week. At the end of the trading session on December 10th, the world spot gold price increased by $34 to $2.693 per ounce. On the morning of December 11th, the price continued to grow, reaching $2.701 at one point. Concerns about escalating tensions in the Middle East are strengthening safe haven buying, said Peter Grant, precious metals strategist at Zaner Metals. Armed groups in Syria took control of the capital, Damascus, after 13 years of civil war, forcing President Bashar al-Assad to flee the country to Russia. Another reason is the trend of monetary easing globally. Grant predicted that central banks in countries such as Canada, Europe, Switzerland, and the U.S. Federal Reserve are likely to take action next week. Investors are now focused on the November U.S. Consumer Price Index, CPI, and the Producer Price Index, PPI, due December 11th to 12th. Both are likely to influence the Fed's interest rate decision. The CPI has limited impact on gold if the result is around the forecast of a 0.3% increase. But the acceleration in CPI reduces the possibility of the Fed cutting interest rates early next year, said Fawad Razakzada, market analyst at Forex.com. The Fed has cut interest rates twice this year, according to the CME FedWatch interest rate tracker. Investors now predict an 86% probability of the Fed cutting interest rates by another 25 basis points at next week's meeting. Gold is considered a safe haven asset during times of economic and political turmoil. Precious metals also tend to increase in price when interest rates are low. Outside the West, China also announced this week that it would adopt a suitable easing monetary policy and a more proactive fiscal policy next year. China is the world's largest gold consumer. The upcoming Lunar New Year there could boost demand for gold, especially jewelry.